Namaste everybody, welcome to UDAYA'S classroom. In today's class we are going to see the not-for-profit organization grade 12 first chapter. I have planned to split this video into three parts. In the first part we are going to analyze the question first, and secondly income and expenditure account we are going to work out, and in the third part we will be seeing the balance sheet. Come, let's get started with the class. Following is the receipts and payments account of Indian Sports Club prepared income and expenditure account balance sheet as on December 31st, 2006. As accountancy students, whenever we read any sum, first and foremost thing what we are supposed to do means we have to see the financial year as well as the accounting period. Right? In this sum, the financial year is December 31st, 2006. So what you have to understand, the financial year is 2005 to 6 and the accounting period is Jan to December. So in some sums we will be having April to March, and in some cases we will be having Jan to December. So the financial period is Jan to December. So why we have to understand the financial year and the financial period in order to calculate any interest percentage and the number of months, it will be easy for us. So we have to be concentrating this aspect also. Receipt and payment account for the year ending 31st December 2006. First, let's see the receipt side. Each and every element in which side of the income and expenditure account it is going to appear. First, balance brought down. Already we know balance is always opening balances will be coming in the balance sheet. And next is subscriptions. So subscriptions, the organization would have been received the subscription from the members of the organization. So subscription is the income for the company. So here we can mark as I. So income and expenditure account, income side, this is going to come. So I am marking it as I. Moving on to the next element, life membership fee. Some members of the organization would be expecting to give lump sum amount for the organization. So initial stage itself, they will be paying the life membership fee. They will not be paying the subscription given. So the lump sum amount will be paid by the members. So the life membership fee would be the lump sum amount. It is the liability of the organization to maintain it. So it will be coming in the balance sheet. So we can write as B bar S. Other than normal entrance fee, if any member wanted to become a member of the organization, he will be paying the entrance fee and then he will become the member of the not-for-profit organization. So this is the receipt of the not-for-profit organization. So it will be considered as income. So we will be writing in the income side. Alright, so you have to see your entrance fee is the initial amount will be paid by the member in the initial stage to become a member of the organization. But the life membership fee will be as a lump sum for the organization. So it is coming in the balance sheet. So here there are chances people will be committing mistakes. Alright, moving on to the next element, tournament fund. So the tournament fund means the organization will be run for the purpose of doing service to the society, welfare of the society will be started. So if the organization is started for the purpose of sports, it will be receiving tournament funds, sports related funds will be received by the organization. So tournament fund, the term fund if it is coming means it will be mentioned, it will be written in the balance sheet. Any fund, already we know general fund we will be writing. If we receive any specific fund, we will be entering in the balance sheet. So always the specific fund should be written in the balance sheet liability side, not in the one expenditure account. And next element is locker rent. The company would have given its locker for rent. So for that it would be receiving some receipts. So rent is an income. So we are writing I here. And next is sale of old sports goods. Suppose this not-for-profit organization, so already you have seen, right, this is Indian Sports Club. So it is obviously sports club only. It will be having some sports materials and all other things. So when it becomes old, the not-for-profit organization will be selling the old sports goods and all other things. So when the sales process took place, the receipt received by the not-for-profit organization is 2,500 here, and here they have given costing rupees 2,200, which means in the company's books of accounts, the value of the sports goods is 2,200. So maybe after using the sports material, after reducing the depreciation and all other things, in the books of account, the cost would be 2,200, which means the original cost of the sports goods is 2,200, but we have sold it for 2,500. So what we have to understand here, it's our receipt. So we will be writing it the income side. So I am mentioning it as I. Here itself you can see 2,200 only the book value, but we have sold it for 2,500, which means the company has sold it for profit. So we can mark it here 300. So in the income side, how much we are supposed to write? Only the difference amount. Profit 300 will be written as income. Suppose if the company have sold it for loss, it will be mentioned as loss of sale of sports goods, and it will be written in the expense side. So you have to understand, if in the sales process, if you have received any profit, the profit will be written in the income side and the loss will be written in the expenses side. Moving on to the next element, sale of old newspaper. Normally we will be purchasing newspapers, right? So when it becomes old, we will be selling it. The same thing will happen in the not-for-profit organization also. So the total newspaper amount 750. So the sales amount is 750. It is one form of receipt for the company. So it will be written in the income side. So you can mark as I. And the last element is legacy. Legacy means, we know very well, the sum of amount or any property will be given to the not-for-profit organization willingly. So willingly, when we receive some legacy, it is our liability, right? So it will be written in the balance sheet. So we can write B bar A. So 37,500 will be written in the balance sheet, liability side, because when we receive any donation or any other form of specific fund, it is our liability. So in the balance sheet, it will be written. Alright. So almost we have completed the receipt side. Moving on to the payment side. The first element we have is salary. So the not-for-profit organization will be paying salaries for the employees who are all working in the not-for-profit organization. So from the company organization, if we pay salary, it's our expenses. So it will be written in the expenditure side. So I am marking it as E. Even you can write, if you are well versed with the debit and credit side, instead of E you can write DRC, is your wish only. And the next is electric charges. So obviously when the company or any other organization, if it is running, will be using electricity, right? So the electricity charges also will be paid by the organization, 5,500. It's an expense, so I am writing as E. And the next is billiard table. Billiard table you would have seen in some films and all, like in clubs people will be playing billiard using the billiard table, small balls. So that is called billiard table. It is an asset. So asset will be written in the balance sheet. Okay, which means the sports club has got this billiard table. So it is the asset of the organization. And the next is office expenses. It is also called as grade 11 you would have studied. Sometimes we will be writing profit side all the elements and loss side everything. Here, this receipt and the payments will have connection. This tournament term already we have seen in the receipt side also. Immediately we need to concentrate here, that is the tournament fund. We have written in the balance sheet, right? So which means the company would have received, that is the organization would have received tournament fund 26,000. From this 26,000, the organization would have spent expenses, right? So when we are writing the tournament fund as specific fund in the balance sheet liability side, obviously we have to deduct this tournament expenses in the balance sheet liability side. So why I am explaining this means by seeing the expenses sometimes we may commit mistake. Income side we will be writing this tournament expenses. So any term when it comes repeatedly we have to correlate with the receipt side and adjustment side. So that is how we have to work out, right? So the tournament expenses will be written in the balance sheet and it will be deducted from the tournament fund 26,000 and minus 8,500. Alright, moving on to the next element, repair of ground. So when it is a sports club, it will be maintaining grounds also, right? So sometimes we have to repair grounds for leveling or any other things. So expenses will be done by the organization. So it is expense. So I am marking it as E. Moving on to the next element, furniture purchased. The organization would have purchased furniture. So furniture is our organization asset. So we have to write in the balance sheet. So B bar S. And sports equipments. We know already sports equipments means it's an asset. So this is also balance sheet. And cash in hand, cash at bank, all these elements will be coming in the balance sheet. Alright. And the last element is fixed deposit. Fixed deposit means FD. The organization would have received some donations and all other incomes, right? So it has to multiple donations and fund, whatever it is. So what the organization will be doing, it will be investing in company's shares or it will be depositing in the banks as FD. Why the organization has to deposit? It will be receiving interest for its FD. which means the subscription outstanding was on December 31st, 2005 means this subscription outstanding is for the previous year, that is the preceding year. So 1200 we should deduct. Always the previous year's outstanding, what we are supposed to receive, to be subtracted, because when we were working out the previous year's income and expenditure account itself, we would have added the particular year's outstanding. So when it comes to the next year, we have to deduct. And rupees 3,200 on December 31st, 2006, which means this outstanding subscription is for the current year. So current year's outstanding always to be added up. So how we will be writing? Subscriptions 52,000 and plus outstanding subscription 3,200 and then minus outstanding subscription for the year 2000 5,200 to be deducted. So this is how we have to work out. Now first adjustment we have completed. So this is how the first adjustment we will be calculating. And moving on to the next adjustment, local rent outstanding on December 31st, 2006, rupees 250. So where is the local rent? Here is the local rent. So let us put a star mark here. So for the local rent, we have received 1,250 rupees income receipt. It's a receipt, right? So the 1,250 we have received for the current year. So in adjustment, local rent outstanding on December 31st, 2006, which means this is the outstanding for the current year. So current year outstanding should be added up. So what we have to do? Local rent 1,250 plus outstanding local rent 250 we have to add. So this is also over. Okay. And the next adjustment is salary outstanding. Salary outstanding on December 31st, 2006, rupees 1,000. Where is salary? Here is a salary. Let's put a star mark here. Salary we have paid, it's an expenses, right? So expenditure side we will be writing 11,000. Outstanding salary for the current year or the previous year or succeeding year we have to look for. So this is for the current year. So what we have to do? 11,000 plus outstanding salary 1,000. We have to add this 1,000. So this adjustment also over. And the next adjustment is on January 1st, 2006, club has billing rupees 36,000. Which means the building has got 36,000 worth of, the organization has got 36,000 worth of building. So do we have any building in this receipt and payment account? No, there is no building, but it was in the beginning stage of the January 1st, 2006, right? So building rupees 36,000, let it be there. And next what they are saying? Furniture. Furniture rupees 12,000. So the company has got furniture also. Any furniture is there? Yes, here is the furniture. Let us put star mark here. Okay. So this furniture has got adjustment here. So furniture purchased 12,000 and already we had furniture rupees
2,200. So we have to deduct 2,200. Book value only we have to deduct. We should not deduct the amount what we have sold.
So the balance amount of sports equipment only the company will possess. So 2,200, so 27,300. So at last in the books of account the sports equipment is 27,300. Alright, that's all. This adjustment also over. Moving on to the last one, depreciation charged on these items at the rate of 10%, which means we need to calculate depreciation for all these assets at the rate of 10%, and in the bracket it is mentioned including purchase, which means middle of the year if something has been purchased means that amount also to be added, and for the balance amount the percentage of the depreciation should be calculated. Alright, so furniture amount, so the first building is here, so the 10% depreciation would be 36,000 into 10%, you will be getting 3,600. So the 3,600 where we will be writing income and expenditure account. Depreciation is our expenses, right? So 3,600 we will be writing in the expenses side of the income and expenditure account, and in the balance sheet we will be showing building 36,000 and minus depreciation 3,600. After deducting the balance only we will be writing in the balance sheet. You know very well in grade 12 you would have done the profit and loss account, and in the balance sheet you would have calculated all these things. So you are familiar with that. The same pattern you will be following here too. Alright, and the next element is furniture, right? So the furniture 12,000 already I have told you. Here we have purchased furniture. So 12,000 plus 7,700 we will be getting total 19,700. So the total furniture that the organization has got is 19,700. For that 19,700 we need to calculate 10%. Okay, then the depreciation would be 1,970. That's all. And the sports equipment. So sports equipment is 17,500. Here we need to see. Already I have done the calculation, right? So we need not to worry about it. So 17,500 sports equipment, and current year we had sports equipment 12,000. So that we need to add up. So 29,500, and we have sold some sports equipment 2,200. The balance is 27,300. For that 27,300 we need to calculate 10% depreciation. So the depreciation would be 2,730. So the 2,730 we need to write in the income and expenditure account expenses side. So all the assets depreciation will be written in the income and expenditure account expenses side, and in the balance sheet we will be writing the particular asset and we will be deducting the depreciation, and the difference amount will be writing in the outer column. So this is how we will be completing. Almost we have completed everything. So this is how you have to analyze this sum, and within 20 minutes you are supposed to complete this sum. So that is what the allocated time for completing the income and expenditure account and the balance sheet. So within this 20 minutes we need to analyze the question thoroughly, and then we have to work out income and expenditure account and the balance sheet. So how all these things will be done within 20 minutes? Only out of practice. So we need passion